Oh, hello everybody. I'm on Davos, and Davos there's a little conference. It's called the World Economic Forum, and we can have maybe some impression from there. I will tell you some short stories, but that's not the main part. Today we have a special guest. We will have the future talk in English and not in German. And we are very lucky and proud that Dan Magallón have time to share his experience. He has a big experience in how to bring investments to the bottom, and he will have a lot of examples. And before I give over the mic to Dan, I will explain you the rules. Please hold the microphone close, but you can anytime you have the chance around the chat to give some commentaries or questions. And of course, Dan will also have some time, give you some time that you have the chance to ask him some questions. So we are really happy if we would have a dialogue at the end. So also I have to say you that we will record, that we can put it on the Next Generation's YouTube channel, and that's the organization stuff. And now I am stopped to talking and give the mic to Dan. Please introduce yourself. What are you doing? Why you are in the future talk? And then we are very excited to listen to your experience, which you will share with us.
Thank you, Olaf, and hello everyone. Good afternoon, good evening almost. My name is Daniel Magallón. I'm the managing director of BASE, and well, today I was invited to give this a small introduction of what we are doing, of the projects that we have around the world, and as well the approach that BASE is following to try to accelerate investments to climate change solutions. So welcome to this hour. I hope that can be a more interactive session rather than a monologue, because that would be very boring probably. So Olaf, do you want that I start already? Olaf? Your mic is on.
I'm there, yeah. Sorry. Yeah, go ahead, please. Sorry.
Okay. So let's go to...
Besondere Vertreter vom konkreten Fall für Günther. Und da müssen wir schauen, wie wir das kaufen.
We have someone with a mic. Can you see my screen? I guess so, no? And please interrupt me or raise your hand, or do some signs, because I'm not have full visibility of the people that is asking questions or raising the hand, so you can interrupt me whenever.
Everything is okay. Go ahead. Big picture. We hear you perfectly.
Basically, I structured the session or the webinar in three parts. First, talking a little bit about who we are. The second part is about the challenges, basically why we exist, what we are trying to address here, and the opportunities. And then the number three, we will jump directly to some project examples that are addressing different challenges in terms of renewables, in terms of energy efficiency, in terms of electric mobility, in terms of financial and climate finance. So we will have opportunity to talk about that. So well, BASE is a Swiss foundation. We are based in Basel. Initially, it was founded in 2001 as an initiative between the Swiss government and the United Nations Environment Programme. And the idea was to create a center that is specialized in the financial aspects and business model aspects. Originally was for focus only on sustainable energy, and then little by little we have been scaling up to other climate change solutions. So we really are focusing these financial mechanisms and business models. We are kind of a small lab of ideas where we test these business models in different countries, in different regions, including in Europe, and try to bring different stakeholders to work together with us in testing these business models. Why we do this? And basically, as you know, this huge challenge that is called climate change requires quite a lot of money. There are different calculations, but some of them they estimate between $2 and $3 trillion per year. And we are not even close to that investment or this amount of investment. If we want to reach by 2030 the target of not overpassing the 1.5 degrees. So we need between 4 and 5 times more money than the amount of money that we are investing now. As well, in terms of Switzerland, it requires quite a lot of money. We're talking about 387 billion in the following years, which is equivalent to 13 billion per year. I think as well, we are not close to that amount. So we really need to accelerate investment to this. And one of the aspects that we are very convinced about this is that most of this money has to come from the private sector. So there's not enough money in the public sector to address this amount of money that is required. That's number one. And number two, we strongly believe that this money should be mobilized locally, meaning that there's not enough money in Switzerland to solve the problems of Africa, or not enough money in the US to solve the problems of Asia or Latin America. So if we really want to mobilize the private sector in Colombia or in Nigeria or in Spain, it has to be with the local stakeholders and with the local private sector. So that's kind of the philosophy of where we are working. We have kind of a special team and expertise in developing these financial mechanisms and business models for these fields. So I was mentioning before, in renewable energy, in energy efficiency, in energy access, in electric mobility, in climate finance. We have been implementing models in terms of adaptation as well, recognizing that in some countries, climate change is going to affect a lot, and we need to come up with business models that are able and capable of addressing these aspects. As well, we have been doing projects related with land use, sustainable agriculture, and in the last couple, I would say 3 years, we have been as well active in terms of projects related with circular economy. So I think another principle that we want, and we are working a lot, is all these business models have to be self-sustaining in the long term. They have to be scalable, not dependent on grants. And we, as BASE, as a non-for-profit, we recognize that we need different stakeholders in order to mobilize this and to prove these different financial mechanisms and business models. So we need the technology providers, we need the banks, we need private equity investors, we need insurance companies, we need the government. And here the question is, what kind of mechanism or business model do you put in place, and how do you make all these stakeholders to work together into the one direction? So that's exactly what we are trying to do. And I would say that part of the why we are doing as well this is because there's a huge need in the market in terms of thinking in out of the box on how to make all these stakeholders working in the same line. As you know, every year we met once or twice per year, all the countries, to try to address climate change. There's a lot of blah, 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 very little action. And one of the aspects that there's a huge discussion always every year is that developing countries are claiming that they should not pay for the damages that were caused by the developed world, and they are expecting that the money is coming from the developed world to solve the problems of the developing world. And actually here, what we are trying to do is actually to tell them, listen, there's a business opportunity out of this, and that you can mobilize investment locally, and you can address climate change in different ways and in all these different aspects. So that's part of the things that we do. We work a lot with different international agencies, a lot with UN agencies, with multilateral banks like the World Bank, the European Investment Bank, the Inter-American Development Bank, the African Development Bank. As well, we work with foundations, with entities of donors like the Rockefeller Foundation, or very important entities that are looking as well to address this issue. So they are our main donors and sponsors, and with this funding, with this little amount of money, we have to do miracles and really leverage a lot of funding and investors and money to address and to test these different models that we are doing. This is where we work. These are current projects. So as you can see, our scope is really global. At the moment, we have projects in the Pacific Islands, in Vanuatu, Tonga, in Fiji. We have projects in Mongolia with energy efficiency, working with banks. I'm going to talk a little bit about that project. As well, we have a project related with agriculture, sustainable agriculture, cold chains, and digitalization and artificial intelligence in India and Nigeria. We have projects, we have been supporting countries, 6 countries and cities in implementing electric buses, electric mobility. At the moment, we have a very interesting project in Dominican Republic where we are supporting the government in implementing electric garbage trucks. So these trucks that pick up the garbage and collect it and put it in a disposal. So it's a very broad scope of projects. However, always our focus and our expertise is focused in business models and financial mechanisms. I try to put this analogy. This is like moving a donkey, and to move the donkey, you have 2 options. You have the stick and you have the carrot. The stick being the policies. So if tomorrow all the countries agree to impose a carbon tax of, I don't know, $100 or 100 Swiss francs or euros for every ton, well, the donkey is going to move. The challenge is when you don't have that policy in place, when you don't have that strong policies that move the market, then you need to have a very attractive carrot in the other side that moves that donkey. And that donkey has many carrot possibilities. And this is where we work. We try to make that carrot beautiful, juicy, in order to move the donkey. We don't work in the policy side. We don't work in the stick side. We work in the other side, just trying to understand what are the local national policies or what are the commitments of the country in terms of climate. And then we try to work with all these different stakeholders. So I'm going to talk today about 2 of the business models that we have. We have many. To be honest, it would take us probably a lot of hours to talk a lot about all of them. I just took 2 of them that I think could be interesting for you to try to learn more about exactly what kind of examples of business models or financial instruments we are dealing with. And the first one is something that we call efficiency as a service. This is really focused in energy efficiency. However, there's some applications as well in renewables and as well in energy storage and other things that we are moving forward. This project at the moment is being implemented in Europe, in Belgium, Netherlands, and Spain. And as well, we are trying to move forward this model in Switzerland and in other areas and regions, as you will see, because we believe that there's a huge potential in terms of efficiency as a service. I want to start putting a little bit of the challenge of the barrier regarding energy efficiency. Normally, energy efficiency systems or solutions are more expensive at the initial phase. So the client has to pay a little bit more upfront. If you want to buy, I don't know, a high efficient refrigerator, it's going to cost you a little bit more than a conventional refrigerator. And the customer has to believe that paying this little amount of money more, they're going to get the savings. And this is where the whole things collapse, because normally people is prioritizing the initial investment that normally we call the CapEx, instead of looking the whole picture that is the OpEx. Normally clients, they don't see the OpEx, they see the immediate expense that I have to do. And this is a pattern that has been followed in all the industries. just talking about cooling systems, air conditioning systems. Every second, there are sold 10 air conditioning systems. And from these air conditioning systems that are sold, the average efficiency of them is 1/3 of the highest efficiency that you can buy in the shelf. So it's very low efficiency what the people is buying. They're buying the cheapest one. And this is becoming a huge problem. In the left side, you can see this graphic, how in the green line that represents a high efficient system starts higher than the red one that is a conventional. But in the long term, in this case, in 10 years, actually the accumulated cost ends up to be lower than the other one. In the right side, we have been doing a lot of analysis of different equipment around the world. This one on the right represents an air conditioning system in the Caribbean, where only 6% of that, the green area, represents the capex, and the other 94% represents the maintenance and energy. And this is basically reflecting what is happening is the owners, the investors, they are taking the decision on the equipment just based on the green area and not disregarding the whole yellow and gray area. So the model itself, basically the principle is saying, okay, instead of selling the equipment as a capex and just focusing on the cost of initial investment, let's focus on the OPEX and let's transfer the whole cost of the equipment in as a service system. Basically, this is a model that has been used for many years. I will explain as well a little bit later on many examples, but the whole idea is that the customer, they don't have to invest in the system. They just pay for the service that is coming out from that system. And this is already happening in the industry. So I was telling a little bit about the barriers, high upfront investments. As well, when we talk about energy efficiency, normally it competes with other investment opportunities. Most of the customers as well are SMEs. Talking about Switzerland, 99% of our companies are SMEs. And SMEs as well, they have some kind of constraint of using the fund. It is not like they have a lot of money. Everybody's thinking on how to cover salaries and short-term investments. So it's difficult to think that they think in long-term. As I was saying before, there's a high risk perception because I have to believe now that this equipment or paying more is going to benefit me in the future. So there's this lack of trust, ends up to be a high risk perception. And as well, one of the factors is that sometimes the user of that equipment is not the owner of the building where they are occupying. In Switzerland, we have a lot of people that is renting, that they don't own the house or they don't own the apartment. And thinking in terms of investing in energy efficiency probably is not a priority. And as well for the landlord, it's not a priority because they are not paying the energy. And this is very common as well in commercial malls or in commercial buildings where you have a lot of tenants and they pay the electricity or the energy. So that's a big challenge. So returning to the point of efficiency as a service, this is a model that, as I was saying before, has been used for many years in different sectors. I think that one of the first examples that I knew when I was young, it was Xerox selling their copier machines, and they were actually not selling the copier machine, they were charging for number of copies at the end of the month. So you only were paying for the number of copies that you were using. So well, the principle, as I was saying before, is the same with efficiency as a service. In this case, we have a program as well that is the predecessor of this one that is called cooling as a service, where the customer just pay for a unit that could be tons of refrigeration or a unit that is pre-agreed in advance with the customer. So, and that price of the cooling as a service includes the amortization of the equipment, but as well the maintenance, and as well includes the electricity. So it's a complete package for the customer, and including the energy or the electricity cost, actually guarantees that the provider is providing the more efficient appliance or the more efficient system, because at the end, the one that is going to pay the inefficiency or the efficiency is going to be the provider. So that's something that we are working. As well, one advantage that we have seen with this one is, with this model, is related with the circularity, the circular economy, because who is the owner of this asset? Normally, the ownership of this asset, it's on the hands of the provider. It's not on the hands of the client, because the client, again, is just paying for the outcome in the same way that you are paying the utility bills. You don't own the power plant. You just pay for the electricity that you use or the hot water that you consume. So given that now I own the assets, it's from my interest as a provider to have an equipment that is modular, that I can replace just pieces, and at the end of a certain period of time, I just can renew without throwing all the equipment and installing a new equipment. I want to recover part of that. So we can start incorporating some aspects of circular economy into this model of efficiency as a service or cooling as a service. Here, I put a little bit a flow diagram. So we have three stakeholders here. By one side, you have the provider that is, in this case, selling cooling services to a commercial tenant. The advantage in this case is that the landlord, they don't have to invest. You know, this is out of the investment that they have to do. This is a contract that is done between the tenants and the provider. And that's very convenient, because at the end as well, the one that is paying the electricity or the one that is more interested in have high efficiency is the tenant. So this model can overcome that barrier. But there are other technologies that can be used as a service as well. For example, heating as a service. We have seen that in Switzerland, there's a huge potential with heat pumps to start offering heating as a service. As you know, we have to transition to a low carbon, to a net zero, and one of the hot areas that we have in Switzerland is the replacement of all the oil-based or the oil-based heating system. So here is a very good alternative for a business model. Instead of trying to sell all these systems to households or SMEs or even the government, you can offer this in a model, as a service model. Obviously, one of the ones that have already take this model and is using this model is the solar photovoltaic sector. You might be very familiar with the PPAs, where in countries like the US, this is a plain vanilla. In Europe, is growing. In Switzerland as well, we have now some companies offering PPAs. Normally, these are long-term contracts where the company invests, they install the equipment, and they make a contract with the client, with the customer, to provide electricity, and the customer commits to purchase that electricity at a certain price for a certain period of time. So there is the same principle as a service model. As well, we have seen potential in storage. We believe that this is the next thing that is coming. Electricity storage is something that is very relevant for all the renewables. So storage as a service, or there are other technologies. For example, there's a German company that is called Kaiser that offers compressed air systems, and they actually offer compressed air system as a service. And already many of the countries where they sell already, the share of as a service is quite important portion of their sales. Well, lighting as a service is the other example. We have companies, very big companies like Philips, with Signify, that they are offering this type of contracts. I think they have the airport in Amsterdam that all the airport has a contract with Signify on lighting as a service. We have seen companies as well in lighting as a service in other countries like Colombia or Belgium, where these companies, they purchase the lamp, they install the lamp, and they just charge as well for a unit that could be minutes or could be kilowatts hours or could be another unit that is pre-arranged between the provider and the client. And as well, in terms of clients, the model is very flexible because you can implement this for the government, for example. So at the moment we have a project where we are discussing with the government of Costa Rica cooling and lighting as a service for the public buildings. In this case, it's very good for the government because they don't need to invest. They just sign a contract, as a service contract for a certain period of time. So what we are negotiating with them is this, that they offer these multi-annual service contracts. And these contracts might be for 5 or 6 or up to 10 years with the provider. So there's a huge potential with the government, obviously with the residential sector as well. I was mentioning before the heating as a service, that could be something interesting for some countries. We have seen that heating as a service is growing in places like the UK, for example. We are discussing as well with airports on how to use the model. Airports, as you might think, they have been struggling during the last 2 years because of COVID, and they need to do some investments in terms of energy efficiency, renewables, and as well integrate to the net zero strategy, and they need to really invest in solar photovoltaics, energy storage, electric mobility. So this is a model that actually could be very beneficial for them. We have seen already a deal with a big one of the members that I'm going to talk about. We have an alliance, but one of the members has signed a contract with an airport in Mexico where they are offering the cooling system to the airport, and the unit that they are using is number of passengers. So they charge for the air conditioning in terms of number of passengers that the airport receives every month. And that's very convenient for the airport because this is exactly the way that they receive the income as well. So it's very easy for them to link and to understand the cost associated with the air conditioning. Well, the as a service model, as I said before, it has been evolving and it has been used in different sectors. I put the example of the printing, that probably is the one that is more mature and evolved. But as well, there are other sectors that are growing very fast. You know, Rolls-Royce, actually, they offer the engines of the airplane, the jet engines, in as a service model. And so they offer this to different airlines. As well, solar photovoltaics is something that has been growing, and in many countries now, the PPAs have become quite a standard model to offer in the market solar photovoltaics. I think in Switzerland we have very good examples of cars as a service. We have mobility, basically it's a servitization model of cars. We have now scooters, and we have e-bikes as a service that everybody understands very well the model. Actually, one of the aspects that we are convinced that why this model has been scaling up very fast is because of the technology, the digitalization aspect. Now has been very cheap to integrate digitalization. You can, with your mobile phone, you can reserve an e-bike or a scooter. So all this technology has come down in prices as well. The connection, the internet connection. Now we're talking about 5G. All these things help a lot to integrate it as a service. Now we are looking at many technologies, including air conditioning, heating, lighting. They come with connections to internet that you can control your systems from your mobile phone. So that has become quite a useful tool. And we see that energy efficiency actually is in the starting phase of this curve in terms of penetration. A lot of work needs to be done. And this is part of the project that we have been collaborating with different providers, financial institutions around the world in trying to scale up this. There are different barriers. It's not so easy for a manufacturer to integrate the as-a-service model. So I can tell you the examples of Johnson Controls or Daikin, which are huge manufacturers of cooling systems, where suddenly they have an army of sales people, and they have to convince people that they can as well not only sell the equipment, but they can sell the service, and they have to change their metrics, because normally all these people is evaluated in terms of amount of money that they sell, amount of products that they sell, and the parameter is sales. And obviously, when you compare sales of service, it's a different type of analysis. So normally this is a long-term relationship that you're having, or that you are getting with the customer. It's not a one-time sale. It's really to be with the customer for 5, 7, 10, or 15 years or 20 years. So that's a very different approach. As well, in terms of financing, that requires a different structure. So we have been helping technology providers to connect with investors, and we have been helping banks and investors to get involved into as a service. So we have been putting in place strategies, financial strategies for recapitalization on this, that goes from providing equity and mixing with debt, but as well more sophisticated things like something that we call sales and lease back, where basically when you have a lot of deals, you can sell the assets to a leasing or a bank, and they lease back this to you, so you can cash on that as well, or you can aggregate projects, and you can do securitization as well. So there are many options how a provider can access funding in order to start offering this. As well, we have been building partnerships between private equity funds and providers, where you build a special purpose vehicle that is offering these type of things. We have seen in our project in Spain, Belgium, and Netherlands, we have seen banks that are becoming quite aggressive into this field. So Rabobank, which is a Dutch bank, they have now a subsidiary that is called DLL, that has been operating for many years, and now they have a department that is specialized in servitization or as a service, where basically the main target audience are SMEs, and they are basically providing all the financing in this scheme, where the customer just pay in as a service model, and they actually close deals and agreements with technology providers. The insurance sector as well, they need to get involved into this, because it's important to reduce some of the risk associated with the operation of the equipment, the damage of the equipment, the risk that, the different risk that involves this type of deals. So we have been discussing with the insurance companies in getting involved. So again, we see a lot of potential in Switzerland. We see that the market is moving very fast, and I can give you an example. And maybe you are quite familiar of these tennis shoes that now are in fashion, the On Tennis. They actually are offering tennis as a service. So they have a subscription model where you pay 35 Swiss francs or 40 Swiss francs, and then you have your tennis for 6 or 9 months, and then at the end of this period, they change your tennis for new ones, and you return the tennis to the factory. So that's a very interesting model. It's a new approach, to be honest, and you can start thinking about the possibilities of the model in different fields. As well, the other one that is offering this is Michelin with the tires. They are offering tires as a service for, especially for trucks, for the transportation sector, where they are charging per kilometer a fee. So the fleets of trucks, they don't need to invest anymore into the tire. So that's something that we are working. We actually have an alliance that was launched a couple of weeks ago, last week, that we call the SET Alliance, the Sustainable Energy Transition Alliance, where basically is actually trying to build this group of entities or organizations that are interested in servitization. We have already a group because we built first the Cooling as a Service Alliance, where it has around 80 members around the world. And now we are transitioning that to not only cooling, but other solutions like heating, lighting, and solar photovoltaic, solar water heaters, etc. Even mobility as part of this. So the idea of these energy, these set alliance is actually to help the members with tools to incorporate the servitization model. We have been, I mentioned before, we have been helping these companies to integrate the model. We have been helping in the financial aspects. We have been helping them in the contractual arrangements. So we have now contracts in different parts of the world that you have to imagine that now a company, they don't sell, they don't supply and sell, they just sell the service. So it's a different contractual arrangement with the customers. So we have been covering the cost of these lawyers in different places where we have now as a service contracts. And well, other things like pricing, we have tools that help on the pricing side, how these companies now price the service because they have to do it in a different way. So that's well, we have been doing that, and we have been as well promoting these companies that are offering as a service. So well, I invite you to look at this facility, at this set alliance, and obviously to join. Talking a little bit about the cooling as a service, with this model we started 4 years ago and has kind of evolved in terms of the projects that we are doing at the moment. These are the projects that we have been already testing. So we have projects in Mexico, Argentina, South Africa, India, where we already are already working with cooling as a service, and as well has been evolving to other fields. So one of the fields that is growing very fast, at least in our work here, is in the agriculture sector. As you can imagine, cooling systems in the agriculture sector is something that is needed, especially in developing countries. So countries like India, where I think at the moment they're in like 45 or 50 degrees. So it's crazy in terms of the heats. And half of the food that is produced in the agriculture sector is wasted because there's not a strong cold chain in the middle way. So what we are doing in this country, especially with some funding from the Rockefeller Foundation, and we're working there with EMPA from the ETH, and including some digitalization and data science. We are building together with technology providers, banks, these cold rooms around India where the service that is offered to the farmers is cooling as a service. So they have to pay only for the food that they store. They don't pay for they don't invest in the cool rooms. They just pay for the service. And we as well are including an app that is helping them to take decisions on when to store this food, the crops into the cold room. And this decision is based on, one of the criteria is based on the market price. So you don't depend only on what the middleman is saying, but as well you check the market price of a certain product. That could be apples, or it could be bananas, or it could be whatever. And then you help the farmer to take a decision to store the food and to extend the lifetime of these products in the market, and use the cold rooms to receive a better benefit and reduce the waste, which is very important in this country. So as well, we have been doing this in Nigeria. Again, our role in base is not to sell the equipment. We don't provide the financing. We don't provide the regulation. Our role is really to enable and to bring all these stakeholders to work together. With a little bit of capital, of grants, we try to test the model, and our experience has been that as soon as we demonstrate that it works, the market starts taking over this and scaling up the solution with other stakeholders and in other regions and in other countries. So that's more or less the philosophy that we have had. I already showed you where we have the cooling as a service. If you enter to our website, you will see a very nice video that was filmed by the BBC, where they talk about the cooling as a service and how this can benefit in some of these countries. In one of the areas that we have been actually using the as a service model is in the electric buses, which is very interesting because electric buses is a technology that actually initially is more expensive than the diesel buses. We can be talking that a diesel bus of 80 passengers cost around 160,000 Swiss francs, when the electric bus costs the double, 300,000 Swiss francs. However, interestingly as well, we have seen that the battery of the bus is only half of the price of the whole bus. So that means that the most expensive part of these electric buses is the battery itself. That's by one side. By the other side, we have seen that the risk associated with these batteries is very high in terms of the lifetime, which is a critical thing for these type of investments, because most of these buses, most of these manufacturers are Chinese. They control basically the market now of electric mobility, electric buses, and they claim that their batteries last for 10, 11, 15 years of lifetime. And obviously there's a lot of concern from the investors on, you know, what's going to happen in the year 7. Are you going to be around, or you're going to run, or where should I claim the lifetime of my battery, because I'm not going to China to try to find you and claim the guarantee. So what we have come up is with as a service solution. That was initially in Colombia, where we allocated 1,500 buses. Basically, we managed to agree with the provider of the buses to sell the bus without the battery. So instead of selling the bus in 320,000 Swiss francs, it was sold in 160, 150,000. Which obviously that was beneficial for the economic analysis, because the capex obviously was reduced by 50%, and then the battery we agreed with the manufacturer to offer the battery in a as a service contract. So basically offering the battery with a price per kilometer, and the whole risk associated with the battery basically was removed from the investor to the manufacturer. So in that case, the risk by one side, the technology, because you are putting that risk to the manufacturer, and by the other side, you are reducing the capex, which makes this type of technology more competitive against diesel buses. So this is only an example of how we are using this as a service model in a specific case as well, that is not energy efficiency. In this case, is in a technology like electric buses. We have seen that some companies are understanding very well the technology. So we have the case of Chile, where NLX, this Italian company, they are offering not the battery, but the whole bus as a service in a kind of a leasing scheme. So they come and they offer the bus. And obviously, when you think about it, and I liked this comparison, this is like the printers. The business of the printer is not the printer itself, it's the ink associated with the printer. So normally when you buy a printer, it's very cheap, but the ink is very expensive. It's the same thing with the buses. You know, at the end, the business is in the electricity that these buses consume. And I think this company understood very well about this. So, well, this is in relation with the efficiency as a service. This is the first example that I wanted to tell you. The second example, and I realized that actually the time has fly quite a lot. As well, I'm going to focus in energy savings, and as well, I'm going to refer again to this graphic where I was telling you that the customer has to be convinced that they have to invest more at the beginning with expectation that they are going to get the savings in the future. So what we have created basically, we started this 6 years ago in Latin America, where we say, okay, what if me as a provider, I'm going to sell to Olaf a high efficient boiler that is going to save him 30%, but it's going to cost him 10% more because he's high efficient. And to guarantee that, I'm gonna write in the contract, in the supply and installation contract, I'm going to write the guarantee of the 30%. And on top of that, I'm going to offer an insurance that is going to give a policy risk to Olaf to guarantee this 30% that I'm promising to him. So that's basically how the model works. It's providing different mechanisms in place. In this case, it's a contract. There is an insurance that is provided by the private insurance. There's an independent technical validation that acts as like a referee. I'm going to explain a little bit about that. And then as well, we link the financing behind. So from the point of view of a bank that is providing a credit for this type of systems, as well becomes very attractive because there's a project that they are financing where basically the cash flows of the project are secured with an insurance. So that becomes very attractive for the financial institution. The whole principle of this model is reducing the risk perception to a point that it becomes more attractive than other investment opportunities. So in this graphic, what I want to show is that 3 different investment opportunities, savings account, basically very low risk in Switzerland, and they pay, I think it's even grown because it pays negative interest rates, but it's very safe. As well, I can compare this with my investment in my core business that normally I understand very well the risk associated with my business and as well the returns. Or if I have more appetite for risk, I can go to the stock market where I know that the risk is higher, but as well my return expectation is higher. And here the question is where energy efficiency is. And normally energy efficiency is perceived as a very high risk. And the returns and the risk return trade-off don't compete with the other investment opportunities. So what we are trying to do is basically to move that perception to a level that start becoming interesting, where the customer has the certainty that, okay, I'm going to invest 10% more, but my savings of 30% are secure because this guy is giving me an insurance that if he doesn't pay me, he's going to pay me the insurance. And that's how it works. Normally, you can see in this flow of money, in the center, we have the SME. Normally, the program is very focused in small and medium-sized enterprises that they end up with a deal with a technology provider to build an energy efficiency project. We call the model, let's say the commercial name is Go Safe, because energy savings insurance was not very attractive according to the marketing people. So we end up building this brand that we call Go Safe, and this project should deliver some savings. And to guarantee these savings, the technology provider is offering to the SME an insurance. So the beneficiary of that insurance, in case that the savings are not achieved, is being received by the SME. In the same way that a bank guarantee or a credit guarantee is ensuring the payment of an SME to a bank. It works in the same way, but it works in different level. So that's how it works. How it works, normally there's a contract between a technology provider and a client where they offer an equipment or a system, a solution, and then they guarantee the savings. And in this contract is established that they should monitor this. These deals normally are up to 5 years. So the contract and the insurance is up to 5 years. We have been implementing this already in 16 countries. At the moment, we are working in Spain, Portugal, Italy, Greece, Croatia, Slovakia, Mongolia, Morocco, and it's already in operations in Latin America. So it's very big project around the world. And we are working with local insurance companies. Just to tell you how much this insurance costs, it costs 1%. Between 1 and 1.5% of the total cost of the project, of the total amount that is being guaranteed. So if I guarantee to Olaf, I don't know, 100,000 Swiss francs per year of savings for the next 5 years, basically the whole coverage is for 500,000 Swiss francs and he only needs to pay 1.5% for the premium, and he will be guaranteed for these 5 years. That's how it works. We have a validation entity, and normally it's, in this case, for Europe, we are working with SGS, the Swiss certification company, and they act like referees, basically, because every year the provider has to report to the client on the savings, and we know that sometimes they are going to disagree. So it might be that, you know, I report to Olaf, we say, Olaf, I achieved 40% of savings, and Olaf is going to say, no, I don't believe you because I pay more. Then we can call this referee, and the referee should say who is right, and according to that becomes very important for the insurance company as well, because they are the ones that are going to pay in the case that the savings are not achieved. So they are a very important player into this model. We are including these technologies in the energy savings insurance. It goes from lighting to solar water heaters to solar photovoltaics. And there are some countries where the model is already in operation, and it's very interesting to see how the providers are adopting the energy savings insurance as a way to differentiate from the competitors. So, you know, in cases like Colombia, where the market of photovoltaic is very competitive, prices actually is not anymore an issue, because all of them offer the same price, but not all of them offer an energy savings insurance. So they can offer a system and a project where the energy generation is insured by this insurance, and that brings a lot of benefits for the financing and working with the financing and the credit conditions for the investor. So, well, these are the two models. Just to tell you, as I said before, these are only two of the models that we work. We have many different models that works in terms of mini grids, renewable energy. We work a lot with banks. We are developing as well green credit guarantees in other places together with the Swiss government. In India, we have a project with SDC in terms of renewable energy integration into buildings, always in the business model and financial mechanisms. We are testing those models. So this is more or less what we do. Sometimes we do publications that you can download in our website from some of the learnings. These are for free. This is open source, so you can download these reports. And I'm going to finalize that because I want to leave maybe 7 minutes for questions, and if there's some comments or some aspects that you want to ask, so feel free.
Yeah, Daniel, yes, unbelievable what you have realized in the last few years, and yeah, your passion is unbelievable. And yeah, I have one question on my side. What are the biggest difficulties to explain the shareholders or stakeholders when you explain them the model as a service, energy as a service? Maybe you have there an answer?
Yeah, definitely there are barriers, and normally I would say that people that is doing well in their business, they don't want to change. And people that as well, a lot of the challenges that we have in many countries is that we enter with an idea that can disrupt the market, and people that is doing business in the with inefficiencies or with oil and oil industry, these kind of things, they are the ones that are trying to block that these things happen. I would say that even in Switzerland, sometimes it's difficult to talk about these topics. I think I have seen Alan, which is part of the team here that help us a lot. It's challenging with utilities because you are talking about efficiencies going into the opposite direction of selling less, not selling more electricity. So I think I would say breaking this status quo, this business as usual, is probably the biggest challenge that we have. It's not even the business itself, because I think there's people that understands very well the business opportunity and they want to adopt these opportunities. Are there sometimes sometimes the government that is blocking that these things happen.
Okay, thank you. So are there any questions from the other participants?